Okay, hello everybody. Just wanted to make a quick little video here. Got a few minutes here to put together this video. We've made some updates to the scanner, and so the purpose of this video is just to give you a little bit of a rundown of what those updates are. And also for those of you that are brand new to the scanner, wanted to give you a little bit of a tutorial, some kind of orientation here on how to best utilize the scanner on a week-to-week day to day, and even on a monthly basis. So there's a lot of metrics here in the scanner. So I want to make sure everybody at least has a general idea of what the scanner does and how you can find weekly signals as well as long-term signals, and even a way you could use this on a daily basis. So let's just jump right into it. Again, I want to kind of keep this video short and to the point. So first of all, again, for those of you that are new to the scanner, welcome. If you've been using the scanner for a while as well, welcome back, and happy you're finding value from the scanner. But let's go ahead and jump into this. So like I said, so here's the scanner. This is Steve's scanner. You can access this right up here on the Trading with Steve website. There's a quick link up here. There's also a link right here in the members area. You can click on Steve's scanner right there. Okay, as well as all the other calendars, booking pages, our group feed, the basic training videos, all of that's accessible right here on the members drop down. Okay, so on the scanner, we have all 28, as of this recording, we have all 28 major currency pairs. Okay, so everything from the euro dollar to the pound yen and so on, everything is included in here. We also have, when you scroll down to the bottom of the scanner, you also have oil, we have gold, silver, we have US 30, NAS 100. So there's a total of, I believe, 33 different instruments you can trade, of which 28 of them are currency pairs. Okay. The scanner looks at a lot of data points. Okay, so let's break down each major data point. So it uses a lot of COT data. And for those that don't know what COT data is, there's several videos you can watch on the COT report in the basic training video section here. We also do a live COT report webinar every Wednesday night at 9 p.m. Eastern, and we've been doing that for several years now. So if you want to go back and watch a COT report webinar, you can go back and watch any one of them in the last year. I'd probably recommend one of the more recent ones, just so that you're up to date with what we're doing currently. And or you can come to the next one. Again, it's every Wednesday night at 9 p.m. Eastern. But let's talk a little bit about what COT data is for those that are new to COT data. So basically, COT report data stands for its Commitment of Traders Report, and it comes from the CFTC, and they're a government regulatory or a financial regulatory authority here in the United States. And one of their responsibilities is to release COT data every Friday. And what COT data does is it tells us what the banks are buying and what they're selling on a week-to-week basis. Okay, so the scanner, it uses this data, and based off of the data that we get each week, we can then determine a weekly signal and even a long-term signal from this data. And I'm going to show you how this works. Okay, that's a very brief rundown of what COT data is. Just know that that's what it is. If you want to learn more about it, I have literally hundreds of videos on the COT report that you can watch. Okay. So we look at COT data. We also look at sentiment data. This has to do with retail sentiment. So these are people like you and me, just random run-of-the-mill traders, a collective group of traders. And sentiment data just looks at what percent of these traders are buying the market and what percent are selling. And typically we want to take a contrarian view to what most traders are doing. So the scanner is actually designed to give you a contrarian outlook on what most traders are doing in the market. And so it kind of gives you an extra level of confirmation. If the COT report signal aligns with the sentiment data, there's a really good chance you're going to get a good trade. Okay, so there's that. So those are kind of the main points. We also added this crowded market indicator, or we also call it just the crowded market alerter. And this also deals with COT data. I'm going to explain what this is in just a little bit. But first, let's start over here. So on the left side, the first column, I think there's like, what, 10 or 11, 12 columns to look at. This first column has all of the instruments. So all the currency pairs and so on. This next column is the most important column, in my opinion. This is the overall signal column. Okay, the reason why this column is very important is because there's more integrations built into that one column than any other column. And what does that mean? So what that means is all the data points we look at the long-term COT report signal, we look at the weekly shift in COT data signal, and we look at the sentiment signal. And it also, the fourth thing it looks at is the crowded market. And how high are we with the crowded market? Is it 5 out of 5 stars or whatever it is? And I know you don't know what that is yet. I'm going to explain that, but it looks at all 4 of those elements and it says, okay, based off of the cumulative score of all of these elements, it provides an overall signal. Now, what is this signal good for? Is this a signal good for the next minute? Is this a signal good for the next hour in the market? Is it a good signal for the next day or week or month, right? And that would be a good question. So most of this data, the COT report sentiment, works on a more of an intermediate scale, and I would call this more of like a swing trader scale. To put that in terms of an actual time frame, you're going to be looking at taking trades that last at least about a week, sometimes more than a week. Okay. I would say if you look at the overall signal as a signal bias for the upcoming week, that's a good use of the overall signal section. Okay. So there's going to be times where the overall signal is going to go against you for the next couple of hours or during a specific session. And you might be wondering like, hey, what's going on here? This trade's going against what the scanner's saying. But it's important to recognize that these data points we look at, COT data, sentiment data, they're not designed to put you in the right direction. Excuse me, let me turn off my phone here. They're not designed to put you in the right direction for the next hour necessarily, although it could do that. It's designed to give you a bias for the week, okay? And sometimes multiple weeks, especially when you're relying more on the long-term signal, which we'll get to in just a moment. So when I look at this overall signal, you can filter this. Right now, it's actually a Saturday for me right now, so I need to update the COT data. I need to go in here and do this. This is actually the signals from the previous week, but when I filter this, you can see here all of the strong buys and strong sells float to the top here. These are the signals you probably want to focus on for the week, right here. Then you also have just sells, you have neutrals. Neutral just means that there's really not a strong enough bias to give you a signal either direction. Down here, you got a couple of buy signals, and so on. So these are your big focus points, okay? And again, I would use the overall signal section as a bias for the week. So how would somebody do this? Well, I would go into the market, and I'll take trades in the Telegram chat and send you guys individual trade alerts using the scanner. However, if you want to use this on your own and go a little more freestyle, which is great, then you want to look for risk to reward ratios. You want to look for a break of structure. You want to look for a return back to a liquidity zone, some kind of return back to support or resistance. If you're not trading liquidity, would be a great way to do that. I also have plenty of videos you guys can watch in the basic training section about the you can learn about how to take a smart money entry or a order block type of entry, all that kind of stuff I teach. So I'd be more than happy to help you do that if that's something you're looking to do. A lot of the signals I post are based off of that type of methodology. Okay, so your bias should be this direction. You could either just simply use these trades at the beginning of the week and just hold them all week, see how they do. That's one way to do it. I think there's a better way to trade. Obviously, if you can try to get specific entries with a good RR ratio, that's going to be your best option right here. Okay, so that's the overall signal section. Also, just on a side note too, nothing's 100%, I do have a great level of confidence. I do take every single one of these trades every week when the new signals come out. So I do believe in the scanner enough to put my own money, obviously, towards it. And plenty of these trades are going to do great during the week. But there all will be some that don't go in the direction that the scanner says. Sometimes that happens. It's just the market doing its thing. Sometimes the data is just not reacting to the current market condition, whatever it is. Just know that it's not a guaranteed thing that if we call out a signal here, if the scanner calls out a signal, it's not guaranteed, but we do have a high level of confidence in these trades. And if that's something that's helpful to you, then great. I hope you enjoy that value. Okay, let's move on to the next section. So this is the weekly COT signal. So we looked at, this has to do with the shift in COT data. So these two columns actually right here, the weekly shift and the weekly COT signal, those are two very much intertwined indicators or columns, okay? So when I filter this will give me the strong buys and strong sells for the week based off the shift in data, okay? This one is very much tied to the direction of the week, okay? So if you're trying to pick the direction of the week, this as well as the overall signal, the weekly COT signal is not a bad place to go for weekly trades. But just know that this doesn't have any other metric tied to it. There's no sentiment tied to this signal. There's no long-term outlook from COT data signal. It is just pure weekly shift in COT data positions. That's it. Okay. So when it says strong buy or strong sell, that means our biggest bias is strong buy or strong sell for that pair for that week and that week only. We don't really have a bias going into the next week or anything like that with that weekly COT shift because it's inevitably going to change the following week. So for those that are new to COT data, what this basically means is when the banks make a big change in positions from the previous week, it creates a shift in COT data. And that's what you're looking at right here in these two columns. So if I filter this next column by the weekly shift in positions, the bigger the number, doesn't matter if it's negative or positive, then there's an even higher level of confidence with that trade for the week. So you look at this one right here, this one's negative 13.12. That's the most negative position. That means that we believe that based off the shift in positions in COT data, we suggest or we believe that that currency pair will probably experience a move lower in the coming weeks. Doesn't necessarily mean it will happen the first day the market opens or by the last day or the middle of the week. It just means that from where the market starts on Sunday when Tokyo opens to where it closes on Friday at the end of New York, we expect a move lower. That's what that is trying to tell you right there. So the bigger the shift, the better. Okay. Now, there's no other indicator tied to this. It is just simply shifting COT data. Can you trade just the shift? Absolutely. Had a lot of success with that. I actually passed a prop firm challenge recently just by trading simply the shifts and nothing else. Okay, from start of the week to the end of the week. You can filter this the other way. You can see this week we had a euro pound was a strong buy based off of the weekly shift was a strong buy. It had an 8.24 positive shift. Okay. Anyway, just something to be aware of. So that's what that does. All of this data is part of what is put into the overall signal, but it is only just a component. So if you just want to break down the shifts and if you just enjoy trading shifts alone, then just focus on these. Okay. If that's something that you put a lot of stock in. I definitely put a lot of stock into it. But I like to try to combine other indicators as well. Some of the other things we look at. Yeah, if you had to pick one way to pick the direction of the week, I'd say the shift is probably your best friend. Yeah, I would say so. So that's what this is going to do. Okay. Whereas the overall signal also does that, but it just goes out and gets confirmation from the other things the long-term signal, the sentiment signals, and so on. Okay. hopefully that covers that. There's also some more information you can read up down here on the long-term signal, the shift in data, the sentiment, all of that you can read down here. So I've put some more info in there. Okay, let's move on to this next one. So this next column is this long-term COT report signal right here. Okay, now what is long-term COT signal? So basically, what we're doing with the long-term COT signal is we look at the non-commercial data, which is known as the large specs and commercial, when we look at the COT report. And when the COT report indicates that, for example, like with this euro pound right now, and I don't know what this, whenever you're watching this is, but as of right now, the banks have a long position on euros and not as big of a long position on the pounds. It might even be a short position on the pound overall. Because of that, the banks are biased to buy pounds right now. Okay, so the signal is to buy euros against pounds. Okay, so that's the long-term cost signal. And that's very helpful because if you can get the sentiment or if you can get the weekly shift in data to align with that long-term signal, then that strengthens the overall signal. You see how we just did that? So that's just this is 1/3 or 1/4 of the signal that goes into the overall signal. So we already have the shift in data, we have the long-term signal. By the way, just so you know, the long-term signal on a week-to-week basis is not likely to change a ton, okay? The shift in data will change drastically week to week, okay? So when you come in here on the weekends, you'll see the shift in COT data be completely different most of the time from the previous week. Maybe not completely different, but very different. Okay, then you got the long-term signal, which may not change very much week to week, but it can still change. So pay attention to that. When you filter this, you can see all the strong sells and strong buys float up to the top. Typically, if it says strong buy or strong sell, that usually means you get into what we call crowded market phase. We're going to talk about crowded market in just a moment and what that means. But basically what the concept is when the banks get a very large position, let's say, like, for example, on the Euro Aussie, what that means is they have a really big Euro long position and they have a really big short position on the Aussie. So you've got lots of buying pressure on the Euro, lots of selling pressure on the Aussie. And normally that would cause the Euro Aussie to go up, and it has. And if you haven't noticed, at least at the time of recording this, the Euro Aussie has been going up for quite some time. Now that's starting to reverse. Why is that reversing? Well, it's because the banks, based off the COT data, are now starting to take profits. So when they start to get that really big position, they have no choice but to come back. It's like that rubber band analogy we use in the classes. When you stretch a rubber band out, once you stretch it out so far, the only direction it has left to go is back to its original position. Okay. So that's what happens when you get to crowded market or when the long-term signal says strong buy or strong sell. What that means is, hey, now that we've had this really big position, it's time to start bringing it back. Okay. So that's the long-term signal. And so I put a great deal of confidence in this column when I'm doing a lot of swing trading. So this is probably your best friend if you're a swing trader. So if you're looking for a trade that will last for the next week to 4 weeks type of thing, maybe 5 weeks even, this is your best column for that. Okay. Now, this signal could be totally wrong on a weekly basis. Totally. Could be totally wrong. Okay. And you will be totally wrong sometimes on a week-to-week basis if you're just simply trusting the long-term COT signal, which is why we built in this overall signal so that we only get into long-term signals if the shift in data and or sentiment agrees. And so the overall signal will kind of keep you straight. It won't let you go too far astray with some of these signals because, like I said, the long-term signal could put you in the wrong direction if your expectation is to make a profit for this week, unless you can get other confirmations behind that trade. Okay, but I do, like I said, as far as planning a trade out, if you like that type of style of trading where you go off on on a long-term trade that could last, you know, a week to maybe up to 6 weeks, maybe. We'll say the average is week to 3 weeks type of thing. So that 3 week average, this is probably one of the best indicators out there in the marketplace as far as picking the direction for the next several weeks. This is really, really good. One of the best, because what that means is the big banks have to start moving a different direction. So you know how sometimes during a week you might have those big, you know, out of nowhere you'll have a big 100 pip, 200, 300 pip move in a week, and you're like, how did you know that that was going to happen? Well, this will let you know that the banks have plans to do those types of moves at some point in the near future. So pay attention to that, because at some point, you know, in the next couple of weeks, you should see a big fat move, and it will often follow that long-term signal. Okay, because this is telling you that the institutions have to lower the how big their position is. Something to be aware of. Okay, let's move on. Then you have the sentiment index. Okay, sentiment has to do with retail traders. Again, we take a contrarian view. So when retail traders go really long, we'd like to go short. When retail traders go really short, we'd like to go long. So you can filter this by strong buys or strong sells. Right now, I don't have any strong buys or strong sells. We just have sells, neutrals, and buys. Okay. Again, this one, I wouldn't rely only on sentiment. Sentiment is just good to know what retail traders are doing. And if you can get sentiment to align with the weekly shift, or if you can get it to align with the long-term signal, then there's an even better chance that you'll have a successful week. Okay. And the overall signal is already programmed to know that. So you don't need to do any extra research on your own. It's just for you to see what the signal is giving you. And then the overall signal is already programmed to let you know what its opinion is on sentiment and how it relates to the other indicators we look at. These two columns right here are basically part of sentiment. So it just shows you by what percentage they are long. So right now, if I filter it this way, you can see that the most long currency based off of retail traders is the Euro franc. So the retail traders, people like you and me, 92% of retail traders have long positions on the Euro franc right now, and only 8% short. So that's what this next column does, is you can filter this the other way, and you can see that retail traders, let's see, 83%. Yeah, see, this is fine. Okay. 83% of retail traders are short on the franc yen, and then only 17% are long. Okay, that's all that's telling you. So it's just a more visual way to look at sentiment. That's all that's trying to tell you there. The next one is pretty cool. This is the crowded market alerter. It's based off of 1 out of 5. I might make this 1 out of 10 stars. I'm not sure, but for now, it's just 1 out of 5. When you get 5 out of 5 stars, what that means is, again, that means the banks have a very large position on these currency pairs. Okay. And the long-term signal becomes a lot more valid when you get 5 out of 5 stars. Okay. So if you can get the crowded market to say 5 out of 5, you can get and if you can get a long-term signal that says strong buy or sell, and if you can get another, you know, like a weekly shift or a sentiment index signal to align, then there's a really good chance you're going to see a move in that direction for the week. And so again, the overall signal is already programmed to let you know what that's going to be. I don't know if you guys saw it, but the euro yen this week had a massive drop to the downside. And that one, let's see, this one had a long-term strong sell signal, and the crowded market was 5 out of 5 stars. And so when you can get 5 out of 5 stars and you can get an overall strong sell or strong buy, then there's a good chance that maybe for that week you'll get a move in that direction. So again, the overall signal is already programmed to give you to let you know when that's about to happen. So there's not a lot of work you have to do. It's more for your gee whiz, just to see if you want to come in here and see what the banks are buying and selling right now. you can filter this and you'll see, you know, here's the top 8 or top 10 currency pairs that the banks are really leveraged into right now. So right now, the euro franc, you can see, you know, that's up here at the top. It's got a strong overall signal. Sentiment's a sell signal. Long-term signal is a strong sell. Um, Weekly shift, not really big enough to create a signal. So obviously the scanner doesn't really regard that as much because there's still enough here to make this a confident signal. But basically what this is trying to say is, hey, the banks are trying to get out of their long positions on the euro franc. And because they've got a big long position on the euro franc. So the only choice they have now is just to kind of go the other direction and close out that trade. Okay. So basically that's what that's trying to tell you. There's no other extra analysis you have to do. It's just kind of for your gee whiz to see, okay, what are the banks needing to get rid of? Okay, so they got long positions on the euro franc. That's why there's a strong sell signal. Okay, so if this says strong sell in the long-term area, then or strong buy, well, in this example, it says strong sell. What that means is the banks have really big buy positions and they have to get out of those at some point. Again, I wouldn't rely on the long term or the crowded market signal alone. I would rely on it and give it a little bit more stock if you can get sentiment and or the weekly shift to align in that direction. Now, the reality is too, if that happens, there's not much you have to do because the overall signal is already programmed to give you that trade. If you could get, this doesn't happen all the time. We're going to see if this can update, but if you can get like sentiment to say sell or strong sell, long term to say strong sell, weekly shift to say strong sell, you bet your bottom dollar on taking that trade because you've got a sweep across all the different things we're looking at. I will pretty much be going very hard. It's hard to get all 3 metrics, sentiment, long term, and weekly shift. It's hard to get all of those things in the same alignment, but if you can get it, like that is a great trade. I mean, don't bet your house on anything, right? Like because it's just trading, it's still risk management, but take the trade. I'm going to be taking that trade if that aligns up. And also another thing to be aware of too, guys. I get this question a lot. Just because one metric says buy and another metric says sell doesn't necessarily mean that it's going to be a bad trade for the week. So you might see sentiment say buy, weekly shift says sell, long term says sell as well. The overall signal is supposed to clear up that and give you more clarity. Okay. So if you see that confusion, that's going to happen. There's going to be currency pairs where there's conflict between metrics. So allow the overall signal to clear up that conflict for you. That's why that's there. And you'll get the hang of it over time. You'll kind of get an idea of what the scanner is trying to allude to and direct or steer you towards over time. But if it when in doubt, I would go off the overall signal. Okay. Okay, so and then this last column is the average daily range. So this is just a helpful tool just to see what the average daily range is for each currency pair. So like, for example, here on the euro pound, it has an average daily range of about 36, 37 pips. That's just helpful if you're just trying to figure out how far this market moves in the day. So that helps you kind of with your stop losses and take profits and things like that. It does nothing as far as picking a direction. It's just a helpful tool so that you know what the average daily range is for each pair. That's it. So. All right, guys. So I think that's a pretty good rundown. I'm sure I'll have other questions. If you guys do have other questions, feel free to ask those questions in the live webinars each day. We do a live call every day you can come to. If you have other questions like, that you want to direct to me personally, you can reach out to me on Messenger, Telegram. You can send me an email at steve@tradingwithsteve.com. Many of you have my phone number. If you have my phone number, great. If not, again, just use Telegram or Messenger. Or my email is fine, steve@tradingwithsteve.com. All right, guys. Well, I think that's at least a good enough review. I'm sure I forgot something. I'm sure you guys have other questions. Again, feel free to hit me up with your other questions. Hope you guys are doing well, and we'll talk to you soon.